Hi, welcome to our second video, which is about who actually moves the stock market. So before we start, here is a disclaimer. I am not a SEBI registered advisor and the content is for educational purposes only. So who actually moves the stock market? So we will be covering a lot of topics today about retail investors, traders, institutional investors, and so on. Okay. So when I first started looking at the charts, so I remember feeling confused. So which is one day the market was up, next day it was down. Sometimes it would drop for no reason, so which I did not understand. And I used to think, is this just random or is this some type of a gambling as people started telling? So before we go deeper into investing, I need you to understand something very, very important. Okay. The stock market is not just numbers moving randomly on a screen, but the turning point for me was when I realized something very, very simple. So which is price don't move randomly. So they move because people and institutions make decisions. So what I mean by people here, the normal retail investors, and when I say institutions, so they are the big guys like mutual funds, index fund. So today I want to show you who these people are because once you understand who is playing the game, you stop feeling lost and you start thinking strategically. So the first type of investors what we see is us, what we call ourselves as a retail investors. So we these are everyday people investing their own money, not billionaires, not hedge funds. So just normal individuals trying to build wealth, such as teachers, engineers, students, small businesses, owners. So when I started investing, I was a retail investor, trying to learn, trying not to lose money, trying to understand what was happening. So what retail investors do, so they always react to headlines. They feel fear when the markets fall and they feel excitement when the market rise because they don't know what's happening at the back end. So they invest for a long term. So they follow trends sometimes and often feel unsure about what to do. And here is something I want you to really understand. So individually, retail investors don't move the market much, but collectively, when millions of people think the same way, so we create a waves. So you have seen this before when a stock suddenly becomes popular online and everyone rushes in. So that's called retail energy. Retail investors are often influenced by news, media, emotions like fear and greed, and that emotional behavior sometimes creates volatility. So what you need to understand here is so don't follow the crowd blindly. So understand what's driving it. As you can see on the screen, so the retail participation, the total number of demat accounts in India has been surged to 150 million by early 2026. So which is a fourfold increase in 5 years. And number of youth participation has also been increased. So 40% of new investors are under 30 now. Traders. So traders are short-term decision makers or short-term players. So now this is where things start to move faster. So traders aren't focused on what a company will look like in 10 years. So they care about what the price might do today, tomorrow, or next week. Some buy and sell within minutes. So we call them as trade traders. Some hold for days. We call them as swing traders. Some hold for few months. So it can span from weeks to months. So we call them as a positional traders. So what they do is, so they study charts. So they study the patterns. So they understand the price behavior. So they know the market psychology. So early on, so everyone will be tempted by trading. So even I was tempted by trading because it looked exciting. So fast profits, fast decisions. But what I realized was this. So trading requires speed, discipline, patience, and emotional control at a very, very high level. So most beginners underestimate that. So if you are starting out, understand. So traders create short-term moment, but that doesn't mean you have to compete with them. So if investing is patience, trading is precision. So we have other type of investors here. So we call them as institutional investors or a real market movers, big money, silent giants. So we give them a different words. So these are organizations managing massive pools of money. So they can be big organizations, pension funds, mutual funds, insurance companies, hedge funds, investment banks. And here is something powerful. So when they decide to buy, so they don't buy 100 shares, so they buy in millions. So that kind of money move markets. So when I understood this, so something clicked for me. So which is then I realized that big price movements often emotional. So they are created by these people. So they are large capital reallocations. So instead of reacting emotionally, so what you need to understand is, so what are institutions seeing? So are they accumulating? So are they exiting? That shift changes everything. So you just need to follow them. So there is an other group most beginners never hear about. So we call them as market makers. You don't see them, so you don't hear about them. So their role isn't to predict the market. So their job is to keep it functioning. So they ensure that when you click buy, someone is available to sell, because without them trades wouldn't execute smoothly. So they keep the liquidity flowing. So they are the infrastructure behind the scenes. A market maker can be individual agent or a broker or a form of security exchanges. So these entities hold liquid cash, so they provide to investors or sellers during a trade. So what you understood from today's training is, so when we bring it all together, so the realization what happens now is retail investors are reacting emotionally. So traders are analyzing patterns, institutions are allocating billions, so algorithms are executing instantly, and market makers are keeping liquidity alive. So the price is not random. So the price is the result of all them interacting at once. So that's why sometimes the market feels calm and sometimes it feels chaotic. So it's not chaos, but it's actually the competitions. So now here is the most important part. So what this means for you? So it means you don't need to compete with day traders. You don't need to oversmart hedge funds. You don't need to react to every price movement. So as a beginner, your advantage is time, patience, and discipline. Yeah. So understanding who is in the game helps you decide how you want to play it, and calm investors make better decisions. So in the next video, we will talk about how prices actually move, how to read basic charts without getting overwhelmed. So if you have any questions, you can just put that in the comments. Yeah, and if you need any topic that you want me to explain, kindly let me know. Thank you.